Hey traders, thank you for your time and I'll welcome to all of you in my channel Live Trading with Veer. Friends, today I'll talk you about my second concept of the series Turn Your Small Money into Big Money within few days. The concept is trade-off, means selection between the trade that have high probability of success or the trade that have good risk and reward ratio. So let's start the topic in detail. Friends, as I have already discussed my first concept, that was the trade only when if there is some mathematical edge over the other traders. Friends, today I'll start my session with a topic of perfect trades. Perfect trade, does it really exist? I don't think so. In my opinion, it doesn't exist. So don't wait for the perfect trade. If it exists, then institutions or the professional traders will take the advantage of that. They have better resources. If it exists, then who will buy opposite to him? My next topic is high probability trades. The trades that have high probability of success. The trade that are in momentum and the trade that have power to multiple your investment within a small interval of time. But there is a problem of high risk. The high probability trades generally have high risk. Finally, my last topic is good risk and reward ratio. It means we can expect good return with very less risk. The ideal risk and reward ratio is 1:2. But generally, we do not go for 1:2 ratio only. We go for 1:3, 1:4, 1:5, sometime 1:10, 1:20 also in case of swing trading. Let's understand each of them one by one. Disclaimer. Friends, this is my small introduction. Perfect trade. What is a perfect trade? By definition, a perfect trade means the trade that have high probability of making lots of money with a very few risk. Dear friends, is it possible? In my opinion, it doesn't. If a perfect trade exists, nobody is going to take a trade opposite to him, and it is a game of two sum. Whenever there is a trade exists, there is a buyer and a seller, both they agreed to some price. At that price the trade exists. How can a person take a trade that have low probability of success with a small reward? Let us understand this by an example. Suppose Suppose there is someone who asks you to invest 1000 rupees in a trade. The trade that has highest reward of rupees 100 and the chance of winning is 1 out of a million. That is very less probability of success or very less probability of making money, or there is no probability of making money. Is there anyone who want to take or want to enter into this type of trade? I think there is nobody, or at least I cannot take this type of trade. This is the main reason why perfect trade doesn't exist. There is always something wrong with every trade. Let us see through this example. Check at this point. This is a point of confusion. Why? This is a situation of trade-off. Why? Because the market is in a momentum and there is a good follow through, but there is a trend line also, which is a major trend reversal. It means At this point, market can revert to this point and this revert to bullish to bearish, or it can continue. But this is sure, market have to take a big move from this point, either on this side or in this side. It means we have to take the trade, but which direction? At this point, the market create a confusion. That's why big volume can be generated. Similarly, at this point again there is a same trend line, same market is in momentum from this point to this point. It is again created a situation of confusion. We have to take the decision. If we want to earn good money, we have to enter at this point. But where? Either we think the market can be continue, it means we have to be bullish. If we think the market may reverse from this point, it means we are bearish. But we have to take the decision. Similarly, this is also a point of confusion. Again, market is in a huge, very good trend. It means trend should continue, but there is a trend line. It means it can be revert from this point. So again, trade-off. At this point, same situation. At this point, same situation. At this point, same situation. So all in all, conclusion is there is always something wrong with every trade. It creates confusions and the situation of trade-off. You have to select either good risk and reward or high probability. So let's understand this topic in more detail. High probability and good risk and reward. Probability of success, we can divide it in two parts: low probability trade and high probability trade. Low probability trade are the trades that have probability less than 40%. High probability means the trade that have probability greater than 60%. Risk and reward ratio, further it can be divided in two parts: low risk and reward and high risk and reward. Low risk and high risk and reward ratio means you go for at least 1:2, means risk one time but reward is 2 times. And as we have already discussed in the first part of this video, where we discussed the trader's equation, always go for the reward which is twice of the risk. If 40% of the trade successful, then you will make good money. So let's find where we have to trade. We have to take two types of trade only: either high probability trade, it may be low risk and reward. These type of trades are generally trend continuation. The trend continuation means high probability of success. Most of the time you find range bound trading when we know the market at the top of the range, it will reverse, and similarly when the bottom of the bottom of the trading range, it will again revert. So but reward is very less in these type of trades. Low probability but high risk and reward ratio. These type of trade we can find on reversal trades, breakout trades. These are very profitable trades. This also very profitable trades. They are also very profitable trades. Yes, these and this both are very profitable trades. So let's understand the rest of the type of trades. Low probability and low risk and reward ratio. Should we take this type of trade? I don't think. Why to bother this type of trades when there is excuse me, when there is very less probability of making money, then why we should enter this type of trade? High probability trades, high probability and high risk and reward ratio. Usually this type of trade doesn't exist. If they exist, it really creates a magic. If you find this type of trade, go for it, and you can not only multiple, you can manifold your money within few very less time. So let's understand this this topic in more practical way. When we have to take the trading decisions, we have to take on in my opinion 4 categories. At the closing of every candle, support and resistance, breakouts, and size of the candle. All 4 are the cases when we have to take the trading decisions. Let's look at this picture. It is a tight trading range. There are reversals, but rewards are small. Here we can make money both sides. Both side means if the market is at this point, then there is a bearish candle, and at the closing of this candle we can take the trade. Check the first point, and from this point it is reverted. Why? Support. Again, it has not touched this point, but it has started making a bearish candle. Go for it up to this point. Very less reward, but there is reward. Again, at this point, when it started a bullish candle, take the trade up to this point. Resistance. At this resistance, the market is fallen straight away. Now, at this point, there is a breakout. Breakout of what? Breakout with a very good big candle. Size of the candle, big candle, it means it's a good breakout. We have to take the trade at this point. It is a good point where we can make very good money. At this point, the stop loss is very far from this point. It means high risk, but high reward also. High risk, high reward, high probability of good probability of success. So very good point where we can make good money. You can enter at this point, you can enter at this point, closing of this, you can enter at this point, you can enter at this point. We can make money. In this trading channel, there is a resistance, there is a support, and whole day market is traveling in this channel only. Similarly in this, right? So now how to choose high probability trades or good risk reward trades? Let us see it through an example. Finally, we have to understand that for every trade there are 2 types of trades. One, traders, one who is selling and other who is buying. Both are trading for good profit. One type of trader who is trading high probability trade, and other who is trading good risk and reward ratio. Sometime both both have equal opportunities of success, and sometimes one have edge over the other. Note, 95% of the time there is 40 to 60% of the success in both cases, either high probability or good risk and reward. But in case of breakout, the probability of success is around 70%. So, friends, you have to choose wisely. If you chose high probability trade, then you have to compromise good risk and reward ratio. If you go for big reward, you have to compromise over the good probability of success or low risk. If you want to take less risk, you have to compromise over the high probability of success trades or good reward trades. Choose wisely. Review. So let's have a quick review. Today I started my session with the perfect trade. The trade that actually the perfect trade doesn't exist. After that I come to high probability trades. The trade that have high probability of success, but we have to compromise on good risk and reward ratio. And finally, I discuss the topic that have good risk and reward ratio, means low risk but high reward, like 1:3, 1:4 or more than this. Hoping you have enjoyed this session. That's it for today, friends. Happy trading.